YouTube, what's the deal, man? It's your boy, and we're back with another video. In today's video, I'm going to break down my full strategy, okay? To the T. Literally, how I find my zones. How do I know if I should be buying or selling? How do I find the trend? How do I enter? How do I understand the gaps? I'm going to break this down step by step in this video, so you guys do not want to miss out on this video, okay? Watch the whole video, because I promise you guys, once you finish this video, you guys will understand supply and demand and how it works, okay? So before I even get into the video, if you guys haven't hit that subscribe button, go hit that subscribe button. I do have a Discord channel. I actually have two Discord channels. One is free and one is $40 a month, okay? If you guys want all my trade ideas and you guys want that one-on-one mentorship as well as the live webinars, go join the private chat room. It's only $40 a month. But if you guys don't want to spend any money, go join the free Discord. It's literally free. Again, both links will be down below, okay? So let's get into the full strategy and what I do every day in the markets, okay? So before I even get into the strategy, I want you guys to understand something, okay? I'm gonna draw this out so you guys can see it. So let me erase this. So I'm going to draw this right here, okay? This is going to be a bullish market, okay? So I'm going to break it down step by step, the bullish market and the bearish market. The first one I'm going to go over is the bullish market. When you are in a bullish market, there's two things you need to look for. And there's two things you need to understand, because if you don't understand market structure, you will not understand supply and demand, okay? Market structure is the foundation of trading, and you have to understand it. So when you look at a bullish market, it's going to create higher highs and higher lows, okay? So where is my first higher high? The first higher high is down here, right? Because it's the highest of this level, okay? Now, at this level right here, that is where the retracement happens, okay? It comes back for a small leg, and then it pushes back to the upside, okay? So as you are looking at this, in order to understand if the market's in a bullish trend, it needs to create a new higher high as well as a new higher low, okay? So the next higher high is up here. Why is this the next higher high? Because it broke this previous high, okay? So you can honestly draw out a line from here, because this was a previous higher high, okay? Now this is now the new higher high. Because why? Because we broke above the previous higher high, and we also created a higher low. This down here is a higher low. Mark that red. That's a higher low. So in a bullish market, you always want to see if it's higher highs being created and our higher lows maintaining. They're not breaking to the downside, okay? Same thing vice versa, right? If you were to see a bearish trend, this is a bearish trend right here. If you were to see a bearish market, this is what it looks like. It's gonna have a lower low, okay, and then it's gonna create a lower high. Now when you are in a bearish market, you do not want the lower high to get taken out, okay? You want price to maintain under the lower highs that are being created. So again, as you can see, there's another lower low created right here, and then another lower high created. So as you can see, nothing is breaking, right? The lower high is right here, this lower high is right here, this lower low is right here, this low low is right here. So in order to understand if it's breaking structure to the downside, the previous lower low has to get taken out. So at this move, that leg that dropped, this whole move right here, that created a lower low. Why? Because we took out this lower low. At first, price was up here, this lower low is right here, we came down and we broke right through it, okay? So that's the lower low. So you have to understand where your lower lows and your lower highs are at when you're on a bearish market, okay? Vice versa, if you're on a bullish market, you have to see where your higher highs are and where your higher lows are at, okay? Remember, if you are in a bearish market, you do not want price to break above the lower high. You want price to stay under, as well as creating new lower lows, okay? On a bullish market, you want to see price create new higher highs as well as maintaining above the previous higher low. Okay, so hopefully you guys understand that. That's literally the most basic thing in trading, is understanding what trend you are in by looking at the market structure. Okay, so as you understand that, again, we're gonna get more in detail into the video on the candles, but I want you guys to know that's the basic of trading. Okay, now supply and demand. What is supply and demand? Supply is aggressive selling. Okay, demand is aggressive buying. So when you see consecutive candles, like look at this right here, that is aggressive selling. As you can see, let me make this bigger. As you can see, we have 1, 2, 3, 4 bearish candle to the downside. That is aggressive selling. Okay, so when you're looking at these supply and demand setups, you want to see, is the move aggressive? Okay, now over here, same thing, aggressive buying. As you can see, when you see these aggressive moves, you could know the difference. Okay, look at this over here at this level. That is, there is bullish candles, right? But does it look aggressive when you look at it? No, it does not. You could literally tell the difference on what is aggressive and what is not. Okay, when you are trading supply and demand, you need to find these aggressive moves. Okay, look at the difference. This has 4 big bearish candle, this has 4 big bullish candle. Okay, this right here, yeah, we have buying pressure coming in, but does it look aggressive? No, it does not. So you have to understand what aggressive selling and aggressive buying is. Okay, because a lot of times you guys may think that's aggressive selling, but when you actually go back and look at it, it's not aggressive at all. And that's what happens, and that's why most traders end up using a zone at that level and it doesn't play out, because maybe it's not enough volume, right? In order to have these zones, you need to have an aggressive move. Understand that. Okay, once you understand where the aggressive moves are coming from, the second thing you need to understand is what is the trend. Okay, once you find the move, you have to understand what the trend is for the day. Okay, because the last thing you want is to take a supply setup when the trend is bullish, or you take a demand setup when the trend is bearish. Okay, so as I look over here, let's see, let's start right here. As I see right here, let me replay this so you guys can see. Okay, so let's say I get onto the charts and I'm currently right here. Okay, now I'm on the 5-minute right now. Okay, but I need to understand what the trend is for the day, and that's what a lot of you guys have problems with. Okay, finding the trend and sticking to that one bias. Okay, so as I get onto the charts right here, what do I see? I see we have aggressive buying right here. Okay, and then let's play this out a bit. What did I see again? Another aggressive buying zone, right? So now we have 2 zones that are aggressively buying. But once you understand these zones, okay, you do not want to take your trade at the top. Okay, you do not want to enter impulsively. You always have to wait for a pullback, because whenever there's aggressive buying or aggressive selling, the market has to come back to where all the investors came in, so that you as retail traders could get into the market and actually push the market even higher. Okay, so you have to understand that once you see these aggressive move, you have to understand that price will always come back to give you your entry. Okay, if price doesn't come back and it keeps going, okay, cool, that's not your trade. Okay, move on, look for another setup. So I understand that we have 2 levels right now that has aggressive buying. Okay, now do I do anything on the 5-minute right now? No, I do not, because the first thing I need to do is I need to check the 1 hour and the 4 hour. Now keep this in mind, you do not have to check the 4 hour all the time. Okay, we are scalping on the 5-minute, so you do not really have to look at the 4 hour. I just look at it just because, but the 5 and the 1 hour, they work hand to hand. Okay, so if you want to make things more easier for you, look at the 1 hour time frame only. Okay, so this is what I'm seeing right now on the 5-minute. Again, I'm not marking anything up. Okay, I need to see what the higher time frame is telling me. So let's go to the 1 hour. What is the 1 hour doing? Again, you have to understand structure. Okay, when you go to the 1 hour, you want to focus on this area, only this area. You do not want to go all the way back, okay? You want to focus on this area where price is currently at, okay? Now, once you understand which area you're looking at, what is happening in this area? Are we breaking structure to the upside, or are we breaking structure to the downside? We're breaking structure to the upside. This was the previous higher high right here. At this level right here, this was the previous higher high. Okay, now why is this the previous higher high? Because in this level over here, this was the highest point the candle printed at. Okay, so this is the previous higher high. At this candle on the 1 hour, what did we do? We broke above and we closed above this level. So now what happened? We are potentially making another higher high. Okay, if you have a hard time seeing if price broke structure, there's two things you could do. Take the line, and then at the previous higher high, put the line at the highest wick there. Okay, that's the first way. Now you see this candle close above. That's the first way you could do it. The second way you could do it is go to the line chart. Look at the line chart. Let me just clear this out. Look at the line chart. What is the line chart telling you? The line chart is telling you that price is right here, and this was where previous structure was at. We are above, clearly above, so we're breaking structure to the upside, okay? So I understand that on the 1 hour. We are breaking structure to the upside. Let me look for demand setup on the 5 minute, okay? I should not be looking for supply because structure is not being taken out to the downside. We're breaking structure to the upside, okay? Now, once I understand that, again, you can look at the 4 hour, but I don't look at the 4 hour. Why? Because it's not really that important. It may be important when it's at a 4 hour supply or demand zone, but most of the time you do not need the 4 hour because you are on the 5 minute, okay? But I will still break down the 4 hour just so you guys can understand. Now look at the 4 hour. What is the 4 hour doing? How I determine a break of structure is by the wicks, okay? If this candle, a lot of people, what they see is the candle needs to close above this level to be a break of structure. No, I do not use the body, I use the wicks, okay? So as you can see, this was the previous higher high because this was the highest in this area. Again, on the 4 hour, you only want to focus on this area, okay? You don't want to go all the way back because you're just scalping, okay? So once I understand that this was the previous higher high, what do I do here? I'll take the line and I'll put at the highest wick at that area. That was where the previous higher high was at, the highest point. This candle broke above. Notice the body did not close above, but the wick broke above. So that is a break of structure for me, okay? Because if you go down to the lower time frame, you will see this wick. There's other candles in that wick, okay? So this is a break of structure. So cool. I understand that. We are breaking structure to the upside on the 1 hour and the 4 hour. And to be confident in your trade, look at that 200 EMA. What is the 200 EMA showing you? Remember, when I tell you when we are above the 200 EMA, we are bullish. 90% of the time, we are bullish. If we are below the 200 EMA, we are bearish, okay? So the 4 hours above the 200, the 1 hour is above the 200. You see how the 1 hour is all the way up here and the 200 is right down here? That is what you want to see. You want to see your higher time frame line up. Now, a lot of times you might see the 1 hour above the 200 and the 4 hours below the 200. Now you have to see what the candles are printing, okay? So when you see that situation, go to your 5 minute and look at what the 5 minute is showing you. Is the 5 minute above or below? Use your confluences. If the 1 hour is above, the 4 hour is not, and the 5 minute is above, I will stick to buying only, to looking for demand setups. Why? Because I have 2 time frames that are lining up and 1 is not. Vice versa. If the 4 hour is bullish, right, the 1 hour is bearish and the 5 minute is bullish, what am I looking for? I'm looking for buys again. Because why? Because there's 2 time frames out of the 3 that are lining up, okay? So build your confluence. Have the 5 minute, the 15 minute, and the 4 hour. What you could do is you could actually put a box right here, and then you could type 5 minute, 1 hour, and 4 hour. Okay, so as you go through these time frame, let's say you start on the 1 hour first, right? The 1 hour is bullish, right? Bullish. The 4 hour is bearish, right? Bearish. If the 5 minute is bullish, right? Bullish. Now look at your confluence. What wins? Bullish, because why? We have 2 time frames that are lining up. Okay, so do this on every trade, and I promise you, you will eventually understand your directional bias. Now, once I understand my directional bias on the 4 hour, the 1 hour, again, the 4 hour is not necessary, but you could definitely look at it. Okay, understand that the higher time frame is bullish. Now I go to the 5 minute. I directly go back to the 5 minute time frame. Now, what do I see? You have to zoom out a bit because you have to see where the break of structure is happening, okay? I see 2 aggressive moves. So what I do, I'm going to draw my zones at each move. So at this level right here, this was where these bullish candles came in, right? Not only did it came in, but it also broke structure, okay? As you can see, how did it break structure? This was a low down here. And where was the previous high? The previous high was right here. This was a previous high. Okay, at this point over here, this was the highest level the candles were at. And then once this move came, it broke past this previous level. So what is that telling me? That's telling me we're breaking structure to the upside. We have aggressive buying. And now, once I understand that, I look for the gaps. Okay, how do I draw my gaps? A lot of you guys have questions on how to draw gaps. So the first gap I'm going to draw is down here. Because why? I see clearly we have 2 aggressive moves. This one and this one. Again, you do not know which zone is going to reject from, but you could only base your entry if it gives you an entry, okay? So I have 2 demand zones. And what's the good thing about these 2 demand zones? At this level right here, okay, when this candle pushed up, it took out these previous highs over here. Can y'all see that? It took out those previous high because this candle pushed all the way up here. And what else did it do? It took out this previous high over here too as well. Okay, not only did it close above, it also broke above the wick of that level. Okay, so you have to look at your structure points because structure points are very important. Okay, so once I understand that, let's draw my zones. I'm going to draw my zones at these 2 aggressive moves because why? Because there is aggressive buying, and whenever there's aggressive buying, aggressive selling, there's most likely always going to be a gap left behind. Okay, so the first way I draw my zone is I look at where the move started. The move started right here. Okay, now do I draw my zone at this bullish candle from here to here? No, I do not. If it's a bullish market and you see where the aggressive buying came in, you want to draw your zone at the previous bearish candle that has a gap. Okay, you want to start there. So as you can see, I want to show you guys something. You see how this bearish candle, the wick goes right here? There's no gap. Why is there no gap? Because let's say if I draw this out from that previous bearish candle, it's already filled in. The candle pushed back out from the box, came back in, and came back in over here and pushed out. The gap is already touched. Now, how do I look for my next zone? Look at the next bearish candle. You don't want to look at this bullish candle. You want to look at the next bearish candle. This bearish candle has a gap. From that wick of that bearish candle to the bottom of that move, there's a gap. Now, where's the gap? The gap is from here to here. Because as you can see, when the candle pushed out of that box at this candle, these candles came back, but we did not fill in this gap here. Okay, so that's a gap. Now, once I understand that, I'll leave that there. Okay, I know the gap is right there. Now, look at this other demand setup. Now, on this one, the first bearish candle has a gap. Okay, so if you do not see a gap on the first bearish candle of the bullish move, keep going over to the next bearish candle. If that one doesn't have it, go over to the next bearish candle and see which candle leaves a gap. This candle right here left a gap. Okay, so I would draw the candle from that top wick of the bearish candle to the bottom of this area. So that's my area. Okay, so that's another demand setup. And again, why did I find this demand setup so easy? Because this was a previous high where price broke structure. You have a hard time, this is what you do. You do this. Go to the line chart, click that, take out this right here, and now you see where was the previous higher high? At this level. And where are we at? We're up here. So what happened? We broke structure to the upside. Okay, so now I understand that. Now let's put this back on the candle. So what do I do now? What do I do? I get a lot of questions where when price comes back to, like, let's say right here, and then people start saying, okay, let me buy it, right? No, you do not want to do that. You want to wait till price come back and tap into your zone, because at that zone there's always a gap. Now, do you see the gap here? The gap is from literally the bottom of this wick right here to the box. Okay, that's where the gap is, because no candle or nothing wick down this area to fill it in. In order for a move to keep moving, it has to fill in the gaps. Okay, so I'll leave my gaps there. And understand, I still have my other zone down here, because why? Because we do not know which zone price is going to reject from. Okay, so we have to have them marked up just in case. So now let's play it out. Okay, again, I'm not taking any trade up here. Why? Because we need to fill in the gaps. When people are going to start buying up here, why? Because they see this big bullish candle. Okay, no, you do not want to do that. It's going to do that, and it's eventually going to come back down. Okay, so you want to wait for price to come back to your zone. So let's play it out. Okay, perfect. So what just happened here? Price came down, filling the gaps. Okay, again, why am I not selling here? Because the higher time frame is telling me that I'm bullish, so I'm only looking at demand setup. Once you understand that, and you make your mind understand that if today the trend is telling me I'm only buying, I should only be looking for demand. If the trend is telling me I should be selling, I should only looking for supply. Okay, stick to one bias. So now this candle came down, cleared the gap, touch into my zone. Now what do I do at this point? I will take my entry when the candle break the previous high. Okay, and what I mean by that is, let me play this out for you guys. So play this out right here. Again, I'm not entering yet. Why? Because we haven't broke any previous candle high. This bearish candle that touched the zone, the previous high of that candle was the wick up here. Okay, has this candle broke above here? No, it has not, so I'm not entering. Now this bullish candle has a previous high, which is right here at this wick. Okay, so what do? I'm not gonna take on this break no more. Why? Because we already have a new candle printing. If the next candle break above this previous bullish wick, I'm entering my trade. Let's play it out right there. See how this candle broke above? This is where I'm entering. I'm entering at this break. Okay, stops right below the zone, and then I go for a 1-to-1. Again, a 1-to-1 is very sustainable and it's very easy to get. And most of the time, you do not want to hold your trade for 1-to-2, 1-to-3, 1-to-4. Why? Because you could be in profit and then price eventually comes back to your break even or stop you out. Okay, so you want to take your 1-to-1 and be done for the day. Okay, so let's play this out. Okay, so now this is another example that I want to show you guys. You see how price literally was right here. Okay, we took our entry and then it came up and eventually it came back down. So what you could do, right, if you want a very quick 1-to-1, is instead of putting your stops below the zone, okay, what you could do is, let's say you enter right here. Let me replay this. So let's say you enter right here. Instead of putting your stops below the zone, you could put it below the area of the candle that just broke. As you can see, so the candle that just broke was this candle, right? That was a candle that got taken out by the next candle, and that's when we took our entry. So you could put your stops, okay, below this area. Let's say the wick is right here of that bullish candle. Give it like 5 pips, right? So let's move it right here. Okay, and then you could target your 1-to-1 right here. Okay, you could do that if you want to do that. Okay, it still works. Okay, but for me, I like putting my zones down, I mean my stop loss down below the zone. But some people, they want to get in and out faster. So where you enter at, you could put your stops below that area where the candle was broken. Okay, where the next candle took out the previous high, just put your stops below there, give it some extra room. Okay, and then just go for your 1-to-1. You could do it that way as well. Okay, what I noticed is when you do it like this, you have a higher chance of winning, because now your stops aren't so big and your take profit isn't so big as well, okay? So when you try to keep it to the smallest take profit and the smallest stop loss that you have, your one-to-one will most likely hit all the time, okay, if you are going the right way, okay? So again, I want to show you guys this because again, I know I always put my stops below, but you could always put it at the previous area where the candles tap into the zone, okay? That could maybe help you guys out because a lot of you guys don't want to sit in a trade for too long, or you guys don't want to see the drawdown. So do it like this, and I promise you, you guys will see better results with your one-to-one, okay? So now let's move on. So let me look for something else. There's something I wanted to show you guys. A lot of times, okay, when you are seeing structure, this is structure right here, okay? Now you see how we are bullish at this from these levels. We are going up, and eventually what just happened? This drop happened right here. That drop came in, right? So when you see a drop like this, there's two things that can happen. It could drop and come down to a demand zone, or the structure is shifting to the downside, okay? So how you want to understand if structure is going to keep going your way or not is, let's say when it broke down right here. Let me go to the 1 hour. So let's say when I get to the charts, I see this, okay? Again, do I obviously tell myself that we are bearish? No, I do not. I need to see what the higher time frame is doing. So let's say I get to the charts right here. I go to the 1 hour. What is the 1 hour doing? The 1 hour has a big bearish candle, okay? And we are under the 200 EMA. So that's telling me, okay, cool, we might be bearish. 4 hour. What's the 4 hour doing? The 4 hour is breaking structure to the downside. Now, if you have a hard time seeing that we're breaking structure right here, turn on the line chart. This is a 4 hour candle. Where was the previous structure? Right here, right here, right here, right here. We, at this 4 hour candle, we broke all of these structure to the downside, okay? So cool. Now I understand that we are bearish. Now go to the 5 minute. Now in the 5 minute, what am I looking for? Am I looking at this demand setup over here? As you can see, we have a demand sitting right here. Would I be confident in taking this demand? No, I would not. Why? Because we are bearish, okay? So if I was to take a demand on the candle break and wait for the break, again, there was no break. Why? Because we are bearish. The 1 hour is breaking structure to the downside. We're under the 200 EMA. The 4 hours breaking multiple structures to the downside, and we are also under the 200 EMA, okay? So when you see a move like this where it shifts structure, you always want to make sure, are we actually shifting structure, or are we coming back down to a demand zone? Now, if you were to look on the higher time frame at this move and it showed you that we're still above the 200 EMA and we're still breaking structure to the upside, then cool, I would be confident in taking that demand setup. But it did not tell me that. The 1 hour and the 4 hour are telling me that we are breaking structure to the downside, okay? So keep that in mind, okay? So I hope this video helps you guys out, okay? At the end of the day, you have to understand that there's no such thing as 100% winning strategy, okay? So when you build these confluences all together and you put them all in one, I promise you, you will see results way more than not having any clue of what the trend is, if this is aggressive or not, you know? So build your confluence. That's what trading is. Trading is all probability. So you want to have the highest confluences, the most confluences when you are trading, because that way you are more confident in taking the trade, okay? As you can see, whenever we're above the 200 EMA, we are always moving up, okay? Most of the time. When we're below the 200 EMA, we're moving to the downside. So if you guys don't have this indicator, put on the 200 EMA because it will help you guys out, okay? So I don't know if there's anything else I want to show you guys, because that's pretty much what I do every single day in the markets, okay? I look at the higher time frame, I figure out my directional buys. Once I figure out my directional buys, I go straight to the 5 minute because that's where my entry is. If the 1 hour and the 4 hours telling me that I should be buying, I'm only looking at demand setups on the 5 minute. If the 1 and the 4 hours telling me I should be selling, I'm only looking at supply on the 5 minute, okay? Stick to one bias, stick to one strategy, understand where the breakout structure is happening, And I promise you guys, once you guys find that zone and that gap at that break of structure, you are going to win most of your trades. Okay, so stick to the plan, stick to the routine. Do not give up. I know trading is hard, but you have to stick to the routine, because if you do not, you're gonna start from square one and you're gonna keep putting yourself in the same cycle. Okay, so again, that's all I have for you guys. If you guys have any questions, comment down below. If you guys want to join the Discord, it will be down below. Again, I'll see you guys in the next video. All right, peace.